Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to
Okay. Hello, hello. All right. So, hello, traders, and welcome back to London Open Weekly Analysis live session. Except for there won't be a London session today because the UK has a bank holiday today, but that won't stop us from analyzing the market for the week ahead. Heading into the trading week of August 25th to 29th. Markets are digesting last week's Jackson Hole vibes. As you know, Jerome Powell, the Fed chair, had a speech at Jackson Hole symposium on Friday. So he kept it dovish, meaning that rate cut friendly, signaling a likely September rate cut amid cooling inflation but steady growth. Stock indices like the S&P 500 and Nasdaq pushed higher after Powell's speech, not to mention crypto and precious metals like gold and silver, which gained massively on Powell's remarks. Now, speaking of gold, it held firm as a hedge, but DXY, which is the dollar index, dipped on cut expectations. What else? Geopolitics are simmering with ongoing Ukraine talks and tariff tweaks, but no big breakthroughs there. We will need to watch for volatility from heavyweights earnings like Nvidia on Wednesday, so after tomorrow, and macro data that could tweak Fed bets. Now, as traders, we need to stay agile. We need to use key levels for entries, set stops, and keep position size right. So don't FOMO into highs without a plan. That's the tip of the week. Now, let's take a look at the key economic data releases we have this week. Let me share my screen first. 1 second, please. So, 1 second. What a beautiful calendar. Okay. Let me zoom in. All right, so let's start one by one. So as you can see, this week's packed with US growth and inflation data. We're talking GDP revisions and PCE, which is the Fed's favorite inflation gauge. And I'm going to tell you what the difference between PCE and CPI, because as you know, and as we mentioned before, CPI is the consumer price index, which is the gauge or indicator that shows the inflation in the United States and elsewhere. But PCE is also a number that shows us inflation, and it's the Fed's favorite gauge. Why? Well, let's start by defining both, and we'll see the difference there. So the CPI reflects the out-of-pocket expenditures of all households, while the PCE price index also includes, so it has more data or more components. So the PCE price index also includes goods and services purchased on behalf of households. So the Fed likes the PCE more than the CPI, and it helps them adjust their policy accordingly. What else do we have? We have, okay, and of course we have Eurozone consumer confidence, and we have the German CPI again, but this one is for August because on Friday we had the July number. Now we have August, or on Thursday, I think. Okay, so let's start. The first one is today, new home sales in the US. And of course, we have the UK holiday, the bank holiday, and we have new home sales in the US. Um, the previous reading was 627,000 new home sales. The forecast is an increase. So the forecast is 632,000 new home sales. That's a key housing sector gauge. If that beats the forecast, it would signal strong demand amid lower rates, boosting the USD and home builder stocks. So, if that came in stronger, we could see the USD going up, and a miss in that number, or below the expectations, or below the forecast, could fuel rate cut hopes. Because after Friday, after Powell's speech, the hopes went back up that the Fed will cut rates in their September meeting. Okay, so that's it for Monday. Let's see what we have on Tuesday. We have durable goods orders, which is an important gauge. It has a high impact. A stronger than expected could ease recession fears. Okay, so that's the business investment gauge. Yeah. So a higher than expected could ease the recession fears, supporting the USD, of course, while a weaker reading might pressure industrials and heighten cut bets. So if it comes weaker than expected, we could see an increase in the odds of cutting rates in September's meeting. So as of now, let me check. As of now, the odds are at 87.3. 87.3% is the odds that the Fed will cut rates on September 17th. What else do we have on Tuesday? We have the consumer confidence from the US. So this number shows how confident the consumers are in the US economy. And of course, if it comes in higher, it means robust spending, which is 70% of the economy, which would lift stocks, while a drop could spark volatility in retail or consumer sectors. Okay. What else do we have? Do we have anything else on Tuesday? No. We have a bank. What is it? We have a holiday in India. It's Ganesh Chaturthi. I'm not sure if I'm saying it right, but congratulations on whatever that is. Then we have on Thursday, we have the GDP. GDP is the gross domestic product. That's the quarterly number. So this one might be revised. The previous number was at 3%. So the previous quarter, the US economy grew by 3%, which is massive. And the expected is, or the forecast is 3.1. So an upward surprise could delay Fed cuts, because that would also strengthen the USD and yields, while a weak reading might rally risk assets on dovish hopes. Because if it comes in weak, that means that the Fed has to cut rates to boost the economy and to boost growth in the economy. Okay. What else do we have? We have, of course, the weekly number, which is initial jobless claims. So that's basically a labor market health check. So lower claims signal strength, potentially hawkish for the Fed. But if it comes in higher, so more people are claiming that they are jobless, that could boost bonds, stocks, and it would boost those on the bonds and stocks on softening jobs narrative, if so to speak. Okay, so what else do we have on Thursday? That's it on Thursday. Okay. We have Friday now. Okay, so Friday we have the German CPI, which would impact the euro. If it comes in hotter, that could pressure the ECB policy lifting euro, while a softer reading might ease yields and support equities. Now, last week we saw that the CPI numbers from Europe or the eurozone came in as expected at 2%, which is the target of any central bank in the world. So since it came in at 2%, this gives them room to lower rates, to lower interest rates if needed. So if this number, which is the German CPI, came in higher than expected, so meaning there's more inflation going on in Germany, which is the Europe's biggest economy. If that happens, that means that the eurozone has to cut rates, or the ECB, which is the European Central Bank, has to cut rates to boost the growth in the what's it called in the eurozone. Okay, so what else do we have? We have the core PCE price index, which we mentioned earlier. That's the Fed's preferred inflation measure, as we said. A sticky print might trim cut odds, boosting the XY, while a below forecast reading could rally stocks and crypto on easing path. If it comes in hotter than expected, that might mean that there won't be a Fed cut or a rate cut by the Fed on September's meeting. But a below forecast would mean that the inflation is going down, so they're safe to cut rates if they want. Okay. What else do we have? We also, this number is the core PCE price index month over month. And then also on Friday, we have the core PCE price index, which is year over year, which is a more important number. It's expected to come in higher than the previous number, which was 2.8%. The forecast is 2.9%. Now, guys, some of you might be thinking, like, 0.1% increase isn't big, but when we're talking about the U.S. Economy, we're talking about an economy that has a GDP of $27 trillion. That's huge. So a 0.1% could mean hundreds of millions and hundreds of, or maybe billions sometimes. So that's why those small numbers and increments mean a lot in economic data. Okay. So a higher than expected, as it is on the month over month, year over year also means that a higher than expected could fuel hawkish bets. Hawkish means like more restrictive. They will keep rates higher for longer, which would hurt risk assets like crypto and stocks. And a softer one would support the dovish Fed narrative. Okay. And then we have, last but not least, we have the regional, we have Chicago's PMI, which is the regional manufacturing gauge. So above 50, the previous number was 47, and the forecast is 45. Now, the number that matters in this index is 50. Okay, so above 50 signals expansion. It means that the manufacturing scene in the region is expanding above 50, which would lift industrials. Any industrial company and stocks and any industrial company stock would benefit from this expansion. But a below 50 reading could highlight slowdown, which would aid the rate cut expectations. Okay. So what else do we have going on in the world? We have Nvidia's. We have some earnings coming in from the US. So Nvidia on Wednesday, and we have Dell Marvel on Thursday for tech. No major holidays. We have a couple we just talked about, but summer. The London Open that is not there had just opened. we don't have a London session today, but it just opened, if there was one. Okay, so I was talking about summer thin liquidity, or summer like low volumes. This could be a good environment for big players or some big players to move the markets and amp moves. Okay, what else do we have? We have Zelensky Trump follow-ups. They might stir energy and defense stocks if that progresses. Overall, and like nothing major other than what we mentioned. We have growth numbers and we have inflation numbers, which is the most important number to keep an eye on, is the GDP from the US and the core PCE. And the most important number is PCE, in my opinion, because that shows, or that tells the Fed a lot about what they're going to do in their next meeting in September. Sorry. Okay. Let's now move to the charts real quick. Yeah. Anyone has any questions on what we just said, on what we just discussed? Let me check for questions. And guys, whoever wants this calendar, follow us on social media to find it. You'll have it, I think, everywhere. But okay, all good. Yes. So if you want this calendar, make sure to follow us on social media, different channels. We have it posted there. It's very important to have it. Let me see if we have any questions. Let me see if we have any questions. When is the news? Okay, so on this calendar, you'll find this column called time. It has the time in Dubai time, which is 6 p.m. Dubai time, 4:30 Dubai time, 6 p.m. Dubai time, and so on. Okay, so here you can see the time of each news release. What time is the high impact news? I just answered that. When do you start trading? I start trading once I see liquidity and setups. So during August, my trading is very limited because, as I told you, we have thin markets, or we have low volumes because most of the institutional players are like on summer vacations. So that's why we don't have enough liquidity in the market. But that doesn't mean that you couldn't find a setup or two. But the trading activity would be a lot lower than other months. Okay, so let me check for other questions. So yeah, I think let's move to the charts now. Yeah? Okay. How do I stop share? Okay. Second, please. Let me share my. So can everyone see my chart? Yes. Yeah. 1 second. As always, we start with the DXY. 1 second, please. We move it to the screen. So, all right. As always, we start with the dollar index. Let's see what happened on the weekly chart. Okay, so last week closed, which is on Friday, it closed bearish. There was some attempts to go up, but it got rejected and closed below this moving average, which is the 10-day moving average. And the price is now officially below all moving averages, so the DXY is pretty bearish. Let's look at daily. After Powell's speech on Friday, this was the candle, a big, fat, engulfing candle that engulfed the whole week's movement. Now we're looking to break below and especially break below the 97 mark. If that happened, or if that happens, we go down to 95.60. So, which would boost the euro, the GBP, the yen, the gold, the silver, everything. Yeah. What else do we have? Let's see the 4 hours. Yeah, so it's still bearish. We closed below. We tried to retest or go back above the trend line. We couldn't. So now we're moving back down. So I'm expecting the XY to go lower. Okay, so let's move to the euro. Let's start with the weekly. So as I always keep saying, the euro is basically an inverted chart of the dollar index chart. So the exact same movement, but the other way around. So it tried to go down, but it got rejected and closed above all moving averages. We have these three, this one, and this one. The price is still above them. So weekly analysis or the weekly chart shows that the euro USD is still bullish, as we analyzed 1 week and 2 weeks ago. Okay, so I think this is a good area to be accumulating positions and longs on euro if you're a swing trader. I think the safest stop for the week would be 1.1570, but like things change, so don't just take it from me now and keep putting your stop loss there for the rest of the week. Things might change, but for now, I'm talking swing trading, yeah. I would wait for the price to go to 1.1650 to go long with my stops below 1.1570. Okay, but of course the safest one, the safest stop loss would be at 1.1370, but that's a bit far, so that would hurt our risk reward. Yeah. Let's take a look at the 8 hours. Looking great, looking very bullish, also above all moving averages and outside the band, so that might start a strong move soon. 4 hours, but still also very good. Yeah, I think that's it for the euro. Let's move to the GBP. So it's closed today. not much volume on GBP USD from the London session, but of course that doesn't mean that the pair is closed for trading, because we have other sessions and we have other markets that are interested in trading GBP USD. And the thing is, guys, about currencies, the reason why they're always open, even when the country is closed, the country of the currency itself is closed, is that because currencies are not only used for trading, they're used for international trade as well. So if I'm importing things from the UK, I'm going to need to buy GBP, which is the pound, to pay for my goods that I'm importing. Yeah. So the currencies keep moving hands even when markets are closed. That's why we say the forex market is the largest and most liquid market in humankind history, because currencies keep changing hands between countries, big institutions, companies, exporters, importers, you name it. Okay. So let's look at the weekly chart. Also a rejection to the upside. It's still above all moving averages, so it's pretty bullish to me. The daily looks also bullish. We have an engulfing candle that engulfed 1, 2, 3 days worth of trading. So that's major. That's no joke. I think we're going back up. A good place to buy would be 1.3450 with stops below 1.3380. What else? Let me look at the big picture. Yeah, so it broke below, but look what held it from going down: the 126-day moving average, which is my favorite moving average. It stopped it from going down. There was a small fake out to the downside. Then we saw a rejection. So GBP USD is also bullish this week. Let's take a look at the 4 hours. Yeah, we broke the short-term trend to the upside, and now we're looking to keep going higher. But let me see. Yeah. So remember when I told you a good place to buy would be the 1.3450? That's it right here, this area. So it could look something like this. It could not happen and keep going from here, keep going up from here, but this might happen. Yeah. But that's just a forecast. Doesn't mean that it has to do that. The price can just keep going up like this. Okay. Let me delete those. Okay, what else we have? USD JPY. Let's look at the weekly chart. Yeah, so I think we're looking at a pattern, which is the bearish flag pattern. Yeah, this could mean more strength for the JPY, especially that the Bank of Japan, which is the central bank in Japan, might be raising rates soon. At the same time, we have the US Federal Reserve planning to cut rates or start an easing cycle, which is cutting rates every couple of months. So this could mean weaker dollar and stronger JPY. So a stronger JPY would mean this, okay? A weaker JPY, sorry, 1 second. A weaker JPY would mean this. So this is strong dollar, weak JPY, and this is weak dollar and strong JPY. Why? Because the USD is the base currency here. So if the price goes up, it means that the base currency, the one on the left, is gaining strength against the one on the right, which is the quoted currency. Yeah. So when I say we might be seeing strength in JPY, we might be going lower on the pair overall. Okay, so let's see where it might be going. Let me zoom out. Yeah, we might be looking at a strong correction to the downside, because look, we had this trend line which has been intact for the past 5 years, but very recently, I think, yeah, this year in April, it broke below and it's having a hard time climbing back up above the trend line. So that would mean, I think, in my opinion, since we have this formation, which looks like a bearish flag to me, we could see something looking like this. So we might be going to 131 yens per $1. Yeah. So this is a very big swing. I'll be looking closely to maybe I would short this pair, but I still need a setup. Let's see if we have a setup on the daily chart. Yeah, actually we do, but it's still not confirmed. So price came back 50% of the previous move. So yeah, I think we do have a setup on USD JPY. A good sell would be here with stops, because it's a swing trade, so it needs to be this far, with stops above 151.15 and with TPs around 133. Yeah, so that's a 1-to-4 risk reward trade. Okay, I might be entering that later today. What else do we have? We have the 4 hours. 4 hours. Yeah, we had a strong rejection from this zone. See this rectangle here? We had a strong rejection and we came back 50% of the previous move, which is looking like an A setup for me. But I prefer to wait till the US session open, which is New York, before deciding if I want to sell or not. But most probably I will go short on this pair. Yeah. Now, last but not least, let's go to gold. Everyone's favorite. Okay. Everyone's favorite right here. Okay. So the weekly, the previous week, not this past week, the one before, we had an engulfing candle right here that engulfed the week before. And someone asked me last Monday, if that engulfing candle could mean more pressure on gold, and if we are going to see it going downwards more than we already have. So my answer was that the engulfing candle is a reversal pattern. Okay, so if we don't have a trend here, what are we reversing? So if we look at the daily chart, we see that we have this triangle, which is a continuation pattern. A continuation pattern. Okay, what are we continuing? We're continuing an uptrend that has been intact for the past 7 years. Okay, makes sense. So on Friday, after Powell's speech, we saw gold pushing higher. We jumped from 3,324 to all the way to 78, 77, which is a big impulsive move. On lower time frames, I saw an interesting pattern, which is the failure swing. That's my favorite pattern. That's a reversal pattern. And my personal setup, which is the engulfing candle, is derived from the failure swing concept. So the failure swing concept, let me explain it real quick. We had a downtrend. Yeah, we had lower lows, lower highs. We're talking like short-term trend, which is the 4 hours, 1 hour trend. Then what happened is we broke above. Still no time, not a good time to enter a buy because we still have all of these moving averages holding the price down from breaking above. Then we tried to go below the trend line again. We couldn't, and we pushed impulsively to the upside and broke this high right here. This is the swing level. So a failure swing is basically when you have a trend, you need to keep having lower highs, a downtrend. You need to keep having lower lows and lower highs. So the failure swing invalidates the essence of each trend, which is having lower lows and lower highs. In this case, we had a higher low. It did not break below this low. So this is signal number one. And it broke above the previous high, which is a failure to break below the previous low and a break above the previous high. That's the failure swing. Now, how do I measure the movement? Where would gold be going from here? Now, the first target would be 3,387. Then we're going to 427. Then we're going to 467, and then finally we're going to 91 or 92. But on the bigger time frame, I see gold going to 3,600. If you guys have been watching the previous Monday sessions. So yeah, I think that's it for today. I'll take your questions now, and let's see. Make it good, guys. Okay. Loving nature. I remember you. Economic report releases data that is better than expected, yet corresponding currency pair drops in value. Tell two possible reasons for this price action and explain how trader might have anticipated it. Okay. So this is a great question again from Loving Nature Guy. You need to change your name because you ask amazing questions. Your name should be related to trading more. So okay, the you want two possible reasons for this. Number one is pricing in. So people our markets usually act or react. No, they act. They don't react. They act based on what is going to happen, not on what is. The markets are forward looking. They look at, for example, if we see the CPI, which is the inflation numbers, if we saw that the markets are forecasting a higher than expected reading, that would mean that this is good for the US dollar because the Fed will not cut rates. So people will start acting accordingly, not according to what is, according to what's going to happen or what they believe will happen. So today, as of today, people are expecting the Fed to cut rates on September 17th. So why the drop in the USD or the DXY? Simply because markets are forward looking. We're going, or the markets are going to act before the fact, not after the fact. So this is mainly the reason behind this, and explain how traders might have anticipated it. Okay, if you do technical analysis, now one of the principles of technical analysis is that the price reflects all available and unavailable factors in the market and the price. So the price tells you everything. You don't need to wait for news releases to know what's going to happen. If you do technical analysis correctly, it will tell you what's going to happen. Let me give you a quick example. GDP number, which is the growth number. There's a whole formula for that, but let me make it simpler for you. So the GDP formula is basically, let's say, exports minus imports. So if exports are higher, if you're exporting more than you're importing, the GDP would be higher. So you have a growth in your economy. All right? And the opposite is correct. So how does the price reflect that before the fact? Now, if you see the euro USD going up and like climbing like aggressively, that could mean that the exports in Europe is doing well. Why? Because people importing from Europe need to buy euro to buy the goods from Europe, right? So this increases the demand on the currency, on the euro currency. Yeah. So this increase in demand would push prices higher, which could mean that you don't need to wait for the GDP number to come out to see that exports are higher, because prices are already telling you that for the past 2-3 weeks. So that's how you anticipate. If you do technical analysis correctly, you would be able to anticipate such moves. And there was a game that I used to play on the trading floor with my colleagues. We used to, based on technical analysis, we used to guess the results of each economic release. So if I see that prices are bullish and the chart is showing me that the euro is bullish, I expect the GDP to come in positive. So that's the game that we used to play. And by the way, I was the champion of this game. Okay, what else do we have? Why nowadays price action ghosted? I don't know who ghosted price action, but I didn't. Possibly of up move. Gold broke the 3,395 level to possibly of up move. Yes, as I said, I'm expecting gold to go up. My target is my first target is 430. The next one is 3,600. What's your daily routine and habit outside of charts has contributed most of your day? I do meditation. Meditation had like a great impact on my performance, because it calms you down, it makes you think clearly, and it sets you up for the day in general. Okay, this get data before retail traders. Okay, we have a good question. Is it correct that institutional traders get data before retail traders? Sometimes yes, or most times yes. Why? Because not because they're like better or they have more money, but because they invest in information vending, which means that on the trading floor I used to work in, each user had, or each trader had, a Bloomberg terminal that cost over $5,000 every month. Why? Only to get the data, not only for the news, but one of the main reasons is to get data ahead of time. So yeah, this can happen. Institutional traders might get information before others, but that's not the main problem that would move markets or that would give institutional traders their edge on everyone else. The real edge comes from algorithms, because by the time you finish reading the headline or the economic release, the algorithms are already in the trade and out of the trade. So they enter and exit before you finish reading the headline. That's why you see high volatility and big price movements at the time of releasing, or at the same second the price or the economic news is released. Yeah. Okay. Into big positions without the market. Okay. That's a good question as well. At an institutional level, how do large players manage to enter big positions without moving the market against themselves? That's a great question. The way they do that is by entering gradually. They don't, for example, if a bank wants to buy $1 billion dollars worth of euros, they wouldn't just go in and ask for 1 billion euros. They would gradually enter with smaller positions like 5 million, 10 million, 5 million, 10 million, on like in different times, not at the same time, so that they wouldn't they wouldn't affect the market or impact the market price, because this could be a violation, by the way. If they do and impact the price, that would be a violation, because it's not allowed to move the markets because you have a lot of liquidity. That's one thing. Another thing, how can you read that on the chart? Do you see these very small ranges, like the 10 pip range that sometimes you see on Euro USD or GBP USD? These small ranges might be, or most likely are, institutions accumulating positions. So what they do is they buy, for example, with using $50 million. Yeah, $50 million might like move the market very slightly, like half a pip. Okay, so it goes up, and then they stop buying. It goes back down, and then they buy again. It goes back up. Then it goes back down after retail traders start taking profits from this small movement. So they keep accumulating positions along this small range, and once they decide that this is the final, or this is the last tranche of position they want to enter, they enter, for example, with $200 million, and then you see the price flying. Yeah. Any more questions, guys? You are welcome. You mentioned, Derwin, you said, like, you mentioned a very critical point, which is without moving the market against themselves. Because also, if they decide to just jump in with $1 billion worth of an asset, that could mean that until they get filled, or they find sellers for their positions, if they want to buy, for example, until they find sellers, the price would be jumping because of the high volume that has been detected by algorithms. So they would get slipped, or they would get slippages, and they wouldn't get the price they asked for. That's why they enter gradually. I think, like, I'm trying to make it make sense. Okay, what else do we have? What else do we have? Yeah, so I'm going back to one more question, to one question I already answered, but I want to go back to it because it's very important, and I'm going to end my live stream after I answer it. But I think I have more to talk about this question. One second, I can't find it. Okay, there was a question that asked what's your daily routine and what made the biggest difference for you in trading. Exercising is very important, meditation is very important, and sleeping well is very important. So guys, make sure that you sleep well, you exercise, and make sure also that your life is neat and tidy, because you need to be like you need to be clean, you need to be tidy in order to have a clear mind, as well as, of course, the dopamine and all the chemical reactions you get in your brain after your exercise, as well as meditation to calm your mind down and slow things down so that you can think more clearly. That's it for me today. I hope this was helpful. Thank you for tuning in, and I'll hope to see you soon. Take care.